I'm very happy that this Cairo Forum is now beyond an idea. It's the second year and a very good start. So we're very happy and proud of that. And the attendance today is great. So thank you for allowing us to be part of this forum. Egypt needs this and needs this to be regularly and to be expanded. So a great, I just want to applaud really the people have been around that. It's not easy to arrange for those type of big conferences, but a very good achievement. So I'm happy. And also I'm very happy to be with this panel. They are all very close friends. I have a new one today, but with the rest, I think we have been engaging in discussions throughout the years. And I love the question. First of all, I'm very happy that I'm not answering a gold question. So that's very interesting that people talk about gold. I will talk about things that might be of equally interest to finance and ministers of finance. In general, I will be very frank. I think it's a tendency everywhere. Very important, very, very important to talk about inflation, to keep it in check. But I think there is huge bias for inflation fears against economic fears. And it's a general concept, I see it everywhere. You talk about stickiness inflation that's going from 3 to 2.5. But you ignore that there are millions of people that are waiting for jobs and that is equally needed. I'm not underestimating the importance of keeping inflation in check, but in general, I feel that there has been in news, in analysts, in experts, huge focus on inflation and how to bring it down, which is a very, very important and needed target, but equally talking about the economy, about job creation, about the competitiveness of the economy from an emerging market perspective is equally important. And I think it's a point that I feel that is worth mentioning. I will tell you two comments in general related to this question. The first is that despite the tightening that we're seeing over the years, it's starting to see some easing in general, but in general, still the cost of borrowing is quite high. There are one clear reason for that, but it's just basically ending into a vicious circle for emerging market, which is the very high public debt. That's something that is adding fears, that is adding risk profile, that is adding, because basically, to cut it short, as simple as that, if investors are seeing debt growing significantly and the trend is an upward trend, they are always betting on measures that will be taken in the future that will bring inflation. So then they are putting or adding a risk premium there. So that's something that emerging markets is adding to the cost of borrowing. But on the other side, we are seeing also other cases where emerging markets or investors interested in emerging markets or funds that's coming to the emerging market are also differentiating. They are also acknowledging reforms. They are acknowledging better stories. They are acknowledging also better prospects and good policies. So you can see this differentiation happening. I will give you one example in Egypt case. And that happened despite the very delayed rating decisions. The very delayed rating. So markets and investors were much more agile, much more forward-looking than institutions. We saw our yields on the secondary market, our international bonds, coming down significantly by maybe from March, maybe by 3 or 4%, 300 or 400 basis points. 80% of that came before the rating decision. So it tells you that investors also they dig deeper. One key message that helps related to the information asymmetry is the quality of the information that you avail to investors, the periodicity, the availability to be there to explain it, the trust that you build over the years, it always makes a big difference in the risk image. So in general, I think inflation I feel that it is in a good shape. I don't see it at a very sticky or high. It's compared to where people want to see it, but in general, I think it's in a very good shape. I think what we should be more concerned about is debt and job creation. And I think both are very, very big challenges for emerging markets, including Egypt. But again, investors differentiate. They can digest things much more, I would say, with a deeper analysis and with a more forward-looking analysis than other institutions that are a bit lagging. But markets so far have been treating us quite well. So that's what I can say. Well, Africa, and you're right, we're African, and we should always remember that. I will tell you that over the last couple of years, where Africa is part of the topic or the discussion that we're having with a lot of investors. And to be frank, most of the time it is coming in that context. It is coming in the context that a lot of countries, a lot of firms, a lot of establishments, a lot of financial institutions are trying to diversify, and they know that Africa is a huge potential, and they are looking for markets that they can use as a base for Africa. And Morocco did very well there, Nigeria is doing quite well, Egypt is doing quite well to serve as a potential hub for international institutions that can use those countries, African countries, as a hub for Africa. Leveraging a lot of things, the proximity, leveraging the free trade agreement, despite it's not always working as smoothly as it should be, but leveraging a lot of other issues, the knowledge, the proximity, the ability to do. So we are seeing a lot of interest in Africa, but unfortunately it's not yet equally distributed. It's still, people are searching for markets to be a base for them to explore the countries and the region and the continent. And I think from that perspective, we're seeing a lot of interest in Egypt recently for being a manufacturing hub for Africa as for the region, the MENA. But also we're seeing this becoming more and more interesting or a common interest by firms when they talk with us. So you can see it. You can see it in a lot of the talks, in a lot of the discussions. We're seeing it also when we talked about or when we're discussing export promotion activities. We have a program that we double it and we're trying to build on it, but you are seeing a lot of interest by firms to select. Some of the features of this program is to cover part of the transportation cost. We're seeing a lot of firms asking for that rather than asking for anything else. We're seeing also a lot of interest to have more insurance and more protection and more coverage there. So you start seeing a real interest. But in general, as an African and as one of the African countries, Egypt, we are seeing also a big, I would say, appreciation by investors for diversity and for diversification. Remittances is very important, by the way, and it's very important for a lot of the countries in the region and in Africa, but also I see that investors value so much the diversification, and they give much more weight when they see countries that has the resilience, that they have the multiple funding abilities, that they see always that you are ready, that you have alternatives, and it's very important, by the way, because people think that opportunities come and that you need to grab it, but you have to be ready. It doesn't happen like that. It doesn't happen that you want to go and explore and diversify and to open new markets. It doesn't happen overnight. You need to do a lot of preparatory work. So this is something also that I feel that we are lacking in the African continent, that we are still on the recipient side, not proactively going and searching for opportunities convincing others. We're waiting people to come to us. In general, I'm not talking about Egypt, I'm talking in general for Africa. I think one big advice for the continent is that we need to be more proactive and we need to create more synergies and complementarities. But I cannot also miss to say something about Egypt. So I want to say one thing related to the flows of funds and some of the comments was mentioned. I cannot agree more that we need to keep the good policies. We need to keep building the resilience. We shouldn't be overreacting to improvements. Improvements are great, much better context. It should give us more ambition. It should give us more desire to do more and to preserve stability and to keep the right things. Secondly, I always say to myself, basics are needed always, and they are the most impactful things. So doing the basic things, doing the right things shouldn't be underestimated and shouldn't be taken for granted, and we should preserve that, and we should keep all the right things to keep it, because also things can move, things can be very fluid at any point of time. So I think, again, we should keep the right policy mix, we should keep the right momentum, we should build on that, and we have a long way ahead of us to do more and more reforms. But coming back to the flows of funds, I think that, one thing that I can tell you is that beyond the traditional funds and the traditional flows, I see huge amount of also an ample funding in the East that is looking for new markets. And in our case, couple of previous examples were really impressive in terms of the cost and in terms of the size that we can get. But you have to start to work on it from now. I'm talking here to my African colleagues, because they don't come as quickly as other funds, but they are also very sticky and very cost competitive, which is the East, China, India, Japan, and the rest of those markets. And they have ample liquidity, and they're looking for inflows and new opportunities, but they need you to be there. They are not coming on their own. You need to be proactive. You need to do a lot of non-deal roadshow. When we did the Samurai issuances, when we did the Panda issuances, people were very happy that we did it, but they didn't know that we started 2 years ahead, and we went there several times. We had to build the relation. We have to build the relation with the regulatory authorities there. But then, after doing that, and after doing first and second issuance, then you start to be present and you start getting the attraction. So it's a big advice I would mention to the entire continent, that we need to be more proactive, and we need to look a bit east also, because this is huge amount of money there that is looking for new markets.
Yeah.
It's good to speak as the minister. It's even easier, by the way. Yes. And I really enjoyed the discussion today, and a lot of what is being said. By the way, we have been talking about it for years. But let me, before addressing your question, I want to say something Karim mentioned. Yes, we should be focusing in the next period on some incentives and some proactive policies that can bring quality and size to our stock exchange. I think we have a great regulator. We have a very good reform that has been done. We have a good, I would say, backdrop and context and global context that should bring more funds. But we need size and we need quality, and we need to come up with more proactive. It will happen over the years, as Wael was saying. But while this is happening, we need to also accelerate it and also augment it. And this would require some proactive policies. And I think in the second facilitation package that will be presenting very soon, we will have some measures for the stock exchange and for making more attractive and more, I would say, more tailored incentive for listed companies and for newcomers to come. We will try to also learn from previous, I would say, challenges, and come up with something. But also, we're not doing it in isolation. We'll come up with the facilitation package very soon, and we'll be open for debate and will benefit from the discussions, and hopefully the final package will be much more capable. But this is a principle. We'll be coming this month to announce the package. It's not driven by or mainly focusing on stock exchange, but it will be, part of it will be for that, and there will be a lot of other measures. Then coming back to your question, so I will tell you two things. One, principle based how to do more better risk management, and secondly, how more policy oriented or more actionable things that we'll be doing to address this question. I think the first one is something I want to highlight as a fundamental shift in how we as the Ministry of Finance as a team, I have the entire team with me today here, we're thinking together about how fiscal policy should be run and how this should be, I would say, have more impact and more influence. We believe fiscal policy should be a balanced one, and that we should be accountable for both discipline but also for supporting the economy. We shouldn't be focused only on getting the fiscal in the right place. We will keep doing that for sure. Nobody take it as that we are diluting that or limiting the importance of that. Discipline and protecting the fiscal position is key. But our role is much bigger than that. Our role is really also to look at the entire economy, how to support the economy, how to come and support experts, how to support manufacturing, how to support investment, how to facilitate others' work. And that's something I want to highlight, because it's not something I'm mentioning today. We mentioned it since the day we came as a team. We said we set 4 key principles or pillars for fiscal policy. The first is building trust and regaining trust with the business community. Secondly, a balanced fiscal policy, and this is what I mean, a policy that is treating equally the fiscal discipline with economic activities. Why I'm mentioning that? Third is that, which I'll talk about, and the fourth is how to create space for more social protection and social or human capital spending. But why I'm mentioning that? Because this is the best risk mitigation mechanism. Having a good economy is your best ally, the best, I would say, assurance that you will be able to do, and much easier to do and preserve fiscal discipline. So you need to keep this in mind. You need always to support the economy and do more there. And by the way, take last year as an example. We did facilitation, we did trusting measures, we did 0 increases in the burden, and we were able to increase taxes by 36%, the highest growth since 2005. It was all through better economic activities. A lot of the people here in this room have contributed to that. They are, by having a better performance on their side, that led to better performance on our side. So I think this is one issue. The second is how to also ensure that what we have will protect and will build on. I think one thing that we want to do this year, beyond the second facilitation package that we'll be doing, whether on the property tax or the customs or the taxation side, but beyond that, what we're going to do is that we'll be issuing to the public and to the business community, local and international, a medium-term context flavor of what we want to do. So we'll be coming with our medium-term debt strategy before that December, to be followed by our medium-term tax strategy early next quarter, Jan-March, for public consultation, and before, of course, March, we'll be coming with our medium-term fiscal strategy. And the idea here is to give people predictability, clarity about our ambition, about our targets, about how we're going to do that, what they should be expecting, what they shouldn't be expecting, to give color about fiscal policy going forward, where we want to see the debt, where we want to see the debt matrices and debt levels, debt services, how we're going to see the tax collection efforts, what are the key pillars there. So one thing that we'll be doing is that we'll be coming and sharing our medium-term perspective very soon across the key measures and the key issues. We're hoping that this will give clarity and predictability and give people more flavor of what we're doing. And the final thing I want to mention is that we as an economic team, I think there is a lot of harmony, and it's a genuine harmony, by the way. It's a genuine harmony, and it's really working well. And I think it's a big asset that we need to keep and preserve and build on, because it makes huge difference when we're working as a team and we're working to support each other. And as the Ministry of Finance, because we have a lot of tools, I think this shouldn't be underutilized. We will be backing our ministers to do more investment promotion, to do more export support, to do more industrialization, to do more manufacturing in Egypt, and to do that while keeping the stability and the discipline for sure. By the way, I'm happy because I'm with you guys today. So don't take it beyond that. But in general, I'm always confident in this economy, in the people, in the private sector here. And that's a big, one of the reasons why I'm very confident about what we can do together.
That's lovely to hear. I mean, looking at the situation and how our borders we are in the crossfire. I mean, but if there is something, at least myself, to be proud of, that our government and its institutions has been able to mediate the ceasefire in Gaza. And I think this was a disastrous humanitarian crisis, and I'm very proud that we have been part of that. But with problems in Gaza, with problems in Sudan, with the limbo in Libya, reconstruction is coming. So let's look at it from a positive point of view. As a Minister of Finance, how do you envision the role of the private sector, Egyptian private sector companies playing, construction companies, healthcare companies, infrastructure companies, and what would the ministry do to incentivize this? And at what extent this could be a game changer to the Egyptian economy over the coming few years?
Thank you for that. And in general, one thing that Egypt has been doing quite well over the last years in general is that it has built a lot of resilience in dealing with shocks. And also, we have now established, through the private sector, very large companies that can do a lot of big infrastructure projects. They have been doing it here. They have learned a lot there. They have gained a lot of experience, and now they are doing it in Africa, by the way. We shouldn't be losing this. There are 4 or 5 or 6 big private sector companies that are doing big things in Africa, a couple of $1 billion of projects. I'm not talking about small projects. And so they now have the experience, the logistics abilities, the ability to be connected also with supply chains, the ability to be competitive in the bidding, the ability. We need to back that, and one of the backing is also our expert support program that is also building some buffers there. One of the things that we did in this program intentionally is that we kept a reserve for the Minister of Investment and the board. I think a lot of the board members are here also, including myself as a board member there, to be agile during the year. If there are an opportunity, we can come up with something creative, with something tailored. So I think there is huge opportunity, but also keep in mind that also there is, as Karim said, there is a lot of also interest from big companies to be now operating in Egypt and in partnership with the private sector. We're seeing a lot of Turkish companies. They are also very active in some of the reconstruction globally in general and regionally. So I think there is also great complementarity that can happen. We have a very good base. We have the proximity, of course. We have the knowledge. We have the private sector capabilities. So I think I'm optimistic in general. But more importantly, I'm optimistic for the people themselves, for the people in our neighbor countries. They deserve a much better opportunity and a much better life. And it's not about we are gaining from that. It's about they gain from stability and from a better, I would say, better life and better services, and also for opportunities for them for job creation. So let's all be optimistic for them, and I think they deserve a much better prospect.